Yo, what's up, YouTube? It's your boy Twan coming back for another video. I know it's been a minute. Glad to be back. But yeah, this video is basically just the first video back of me just breaking down my current strategies I'm currently using. If you get anything from this video that you can use in your own trading, let me know down in the comments. And also, hit that subscribe button, like the video for me, please. I greatly appreciate it. And also, if you want to follow my trading page, it's in the description below so you can see me trade every single day while I'm posting my trades, trade ideas. I come in as well. So yeah, if you're interested in any of that, thanks for it and enjoy the video.
So let's get into it. So today we're gonna go over our strategies, just the overall breakdown of charts, what we look for. Basically just going over the full strategy in as a whole. So today we're gonna start with let's start with gold. Everybody says gold is hard to read. Let's clear charts. All right, so first thing I'm looking at going into if I'm a brand new trader, let's say the markets, I'm not trading right now. And first I'm looking at is going to be just go to the monthly. You don't have to go to monthly. You go to the monthly. You don't have to do this all the time, but starting out, go to monthly, you go to week, you go down. So these are the four different time frames that you go into one. When now it's different. Now, whenever you take, when you're looking at the charts, just off of just looking at them for the totality of what they are doing, you just look at the daily and the week. The main time frames you look for is the month. Well, the month is important, but you don't have to pay attention to the month that much. But definitely the week. What is the week doing? The day and the four and the one. So those will be the main time frames that you pay attention to. Just when you're looking at the charts in general, and you go to lower time frames when you're looking for to get in for entries. So for this is so it's on the weekends. So this past week that not gold, it was a bullish. So we're gonna look at that, and we're gonna look at what the price action did. So first thing that we're gonna notice is a daily charts, buys and lows. So it was 5 days. So this was all this week of trades. So this was Monday, Tuesday, Wednesday, so on. You can see you could take buys every single day and still win, even though these same trades were bullish days, but you still would take the buys to win. Yep. And then how do you actually catch those trades and what it looks like? And this is more for where we see the actual trade formations and where we're thinking about getting in. This is where it's all going to live at. It's going to be the 4 hour. This is going to be your most important indicator right here. So just a week, just to show you what this whole week looks like. This is the weekend. The market's unclosed. This is surely just for we know what we're looking at in the future. So this is just how we go about looking at the charts. So basically, there's going to be the 4 hours. First thing I'm looking at is going to see, I see a 4 hour trend. So we get trend lines. We can pull this here. So this was a clear buying up type of scenario here. It's bought up all week. It bought up all week right here. So this would be the first little point you would want to. This was like Thursday. What is this? Thursday. That's last week. Okay, yep. So it's that's the week before. So this would be easy. So this would be before it even happened. So this happened March, April, May, June. Yeah. So we're all somewhere around here for these weeks. Starting right here. Where's Monday at? So Monday's price action will start here. So before that, Monday would have before Monday, Tuesday, Wednesday. Yep. So we would already have this price action here. This would be previously Fridays. The market starts Sunday at 5 p.m. So you could already have this. So this would be the first line that you would draw because it's trending. So this would be an uptrend. You could hold this line all week. And it did hold strong to this trend right here. And you see it bought up to here, here, here. Here, you could have bought up here, just to see where price is sitting at. And the next thing we're looking at, we're looking for support and resistance. And then you mark this up with these. I mark these up with these boxes right here. And I'm looking at where's price sitting at and where are the major liquidity zones at. That's all you basically marking up here. So you can see something right here because it touched here, here, here. We see another one that's right here at the top. It's right here. There's another one that's right here. These are all just zones. This zone, yes, it's going to be here, but you could also, these are just zones that you could play with. So this is still valid right here because these are zones too that you can move. So one, two, three, and then you would try to just catch the trades in between here. So this would be the first thing that I'll be looking at onto my approach. It's going to be marking up the 4 hour as much as possible so I know what I'm looking at as well. So we know here, you would say you want to take sells here And you want to take buys at the low. So remember, you take the buys at the lows and the sells at the high. You don't take the sells here. So you wouldn't get to a sell right here or here or here because it's already down, it's buying up. And these are 4 hour candles. So what it means, so inside of all these 4 hour candles are going to be smaller 1 hour candles, 2 hour, and 3 hour candles. For the sake of this videos, we'll just start from four and we'll go to one. And then so the next candles would be here. So these are kind of what you'd be looking at there. And then what you'd go here. So you'd be looking. So potentially you wouldn't be able to see any of this. You wouldn't be able to see any of this right here if you would get into trade. So like right here, market's gonna open, market's gonna either shoot down or shoot up, and then we'd wait until price action comes in. Okay, cool. So this is what we do pre-market analysis. We just market what we see. We're not really trying to catch anything. We're just observing and taking the trades. So the next part would be it's gonna be so this would be like something I would do like the night before. Just be like general just markup. Let me see what I see. And then I know in the morning, because I know everything that I trade is gonna be US balance and dollar based. So that primarily stuff is gonna be moving New York session. So typically it's gonna be night when I'm looking at it. So it'd be like around like 9 p.m. This is what I'd mark up beforehand, and then I usually wake up around I try to get on the charts around like 4 a.m. Central time because I'm in Texas right now, so it'd be 5 a.m. Eastern Standard Times. And I've noticed that around, like I said, 5:36, that's when the pre-market moves start moving. And you can also see that from here as well on the smaller time frames. I can also switch. Yeah, let's go to smaller time frames because I want to switch to a different can of charts. Have to remark everything up. So even here, so this is when I say you can go back and test this as much as you can tell by test, but I know this works. Cool. Let's say here, like, what do y'all think? So this is the hour. So these are where the price breaks down a little bit more. And you see price touched here, it touched here, it touched here, and then it's gonna come back here. This is gonna be 21. So this would be Monday. So this would literally right here it would be like Monday morning. This would be pre-market. Sunday right here. This would be Sunday's markup previously. Thursday, Friday. I keep all these candles like be throwing me off. But yeah, so this would be right here, be 22. So this would be around like 9. So this is all you would see. It would be everything from, let's say, about here back. So you're doing pre-market now. None of this stuff is going to be here. None of this stuff is going to be on the screen right here. You would only see this. So you can really only go off of previous seen candles or previously printed candles. You can't really go like what the candles look like now because they're not done printing. So you see this. First thing I would do here is like I know I'm only going to take my trades during a certain amount of times. So the established times are going to be pre-New York. So you can start looking to take trades. I would say around like 5:30-ish Eastern Standard Time onwards. So in that in mind, you you wait and then you see, and then you wait for a retest back into a liquidity zone where price already has previously sat at. So these are hours. This is one, two, three. This is four. 5. This is going to be 5 o'clock candles. So typically this would be like Tuesday move. So if you're seeing here, you get up at 5, it's like 6. 6 o'clock hits, you see it's at the top of these liquidity zones right here. Make these good because all liquidity zones right here. And then you want to support and resistance. So this would be a support, this would be a resistance. You're going to try to run and take. You always want to take trades either at support or resistance. You don't ever want to get in the middle. The middle is just going to be, I like to think of it as probabilities like standard deviation. Just like this is where price is going to be at. Price is either going to be at a high or a low. And this is kind of how you catch it. So you can see here, it came back and retested after it bought down. It already touched here previously. So this would be a good buy entry right here. This candle happens at like 9 and this is 11. So you could get in between here, right here. Now you could still get in for a buy here, but you'd be too early, but you have to wait until you get like a break of a low. A break of a low. I always try to get at a low of the day or the high of the day. Remember that. You want to get at the low of the day or the high of the day. So for instance, right here, this would have been the low of the day. It came back, it broke all these previous lows. It did the low, and then what did it do? It bought back up. Boom. How many pips is that? That's probably like, I would say probably 100 maybe. Yeah, it's 15, 16. That's a lot. and actually did catch that move this week right here. And then you go back to here, and then yeah, that's it. And that's typically what you look for when you get in for the buys. Now, it's easier said than done because you have to actually have patience to wait on these type of moves. But just for the grand scheme of things, overall, what we're looking at, this kind of how you find what trades you want to get into, be it highs and lows. I can already see this one right here. It formed right here. This is a three. This would be like a double top. This is at 9. This will you be looking at trades. Okay, what is it going to do by this time? Breakdown, retest, sells back down to here. When is the 5 o'clock hit? This is the 5. This is the retest. Came back in around about 8 o'clock, 9 o'clock. It did the dump. So you could either take trades. So this would be something, I didn't even put this right here. So this would be like a trade you would potentially take right here. All I like to do is only risk like 100 pips per trade. So this would be like a good trade, risk to reward right here that we would take. I did actually end up taking this. Then you could either do the reversal of it and take the sales right here, but you have to be either right or you're wrong. Like, you know what I'm saying? Like you're trading with a bigger time frame. So also you can test bigger moves as well. I usually like to catch 1 to 3s, depending on like I used to catch 1 to 3 minimum on any trade you take. One to threes, 1 to 3.5s. Really, 1 to 3.5 is the minimum. 1 to 3s. Anything plus that's gonna be gravy. Okay. But starting out, just take the 1 to 3s. This trade definitely the strategy is built off of more of a longer hold type of strategy. But for the sake of psychology and just starting out building the account, starting out. Just take the 1 to 3s. Just take the 1 to 3s. Don't try to chase them because you can get in a sense where you think it's always going to do that. And sometimes it doesn't usually do that. I'm just saying, just to keep safe, you want to take the 1 to 3s because even if the market volatility isn't the best, that 1 to 3 is going to keep you safe. Because your price could definitely always go up to that 1 to 3 ratio and then come back down and dump in the opposite direction. So that's why you take those trades. You just take the 1 to 3. That's why I got to put a stop loss and all that. And you can see how easy it kind of is just right here. I kind of look to see where price is at. Like this is what is this? 14. This is at like 1. For the most part, I don't usually these would be a date I wouldn't trade. I could trade this day. This is at like 1 or 2, but it's late in the day. Not really the best type of moves that I would like to trade too. And then this is Wednesday. What is this? For the 1, 2, 3, 4. This is going to be the hour, and you see like 5 and continue to buy up. So you could potentially just continue to take the buys up to right here. This is the same type of trade, same buy here. And this is clearly how I can look at it. I can kind of tell like when price is moving because volatility comes in at those particular times. But yeah, so these are kind of what the trades would look like when you want to take them. But yeah, so these would be early. This would be like a early buy situation right here. You can take the sell back down. And then these are just going to be Friday. Friday didn't have any volatility that much, but you could still take sales regardless because there's a smaller buys right here, or you can take the sell. So you can really take whatever you want with this trade. But the trades that get you the most pips are going to be the trades that are in the direction of the overall moves. So this is how we kind of look at them from a hour standpoint. So this is what you would look for beforehand, and then it gets 15s, 14s. And this really just comes with just knowing what to trade, what to look for. So you know you're already seeing the double bottoms up here. It broke this 15. As soon as you get a break of the 15 right here, it broke this market structure right here. You can take this sell down. And that's how you know it's because it broke this market structure. As soon as price breaks this, you already know you're good to get into it. But you always want to wait for those confirmations. So you want to have 15-minute candle in the direction of the trade, 15-minute, 30-minute candles. You always want to have some type of candles moving in your direction already before you get into the trade. So for instance, you couldn't really get into this trade this early if you don't follow the rules. If you follow the rules because you need a break and then you need some type of retest. It broke down. This little 15-minute candle is the retest, but you got to kind of break it at what time that happened. 3 o'clock. We wouldn't even be in that trade anyways. So realistically, we would probably get in this trade a little bit like right here. Because this is 6, this is 5. You'd have to take this thing right at 5:30 or 5. So this would only be a trade right here, but there's no retest. So you can't really get in right here. You have to wait on the retest. The retests always are going to happen more closely to the actual session times whenever they go on. So these are going to be like closer to 9. So you have to keep that in mind too when you're taking the trades. Yes, it is 5 o'clock. It could be making a move, but the market does not open until 9. It can do whatever it wants till 9. So I would expect some type of retest into the sell. And as well, it did the sell. It's buying up here, come back here. You could wait. Even if you get up at 5, 5:30, you could wait it out. You'd be like, okay, I'm gonna wait till your price comes back and retest this area right here. Boom, easy trade. You wait for it. Easy trade because this is a push point right here. So it's a 15-minute push point. Wait till price gets back into here. As soon as the price comes back in here, it dumps, retest. You get back in on this trade, this entry, and you ride this thing all the way down. And that's typically how we take those trades for the most part on those lower time frames. But the main thing is just waiting on the trades and not getting caught up in all the other moves because you have to realize that there are market makers and they know when there are retail traders in the stock market and they're trying to get all the monies that they can. So they're intentionally wait for price to look really good, like it's going to buy up, and then put like some type of drop above because there's probably a lot of people that got in for the sell right here that thought it was going to continue to come and sell back down to here and not pull back. So that's why price pulled back up into these back into these highs. And the same right here. Same with these. Same with all of this. Especially like right here. What is this? Momentum 6. It's moving up, it's buying. And you're gonna say there's a gap right here. So and the best way you could take this gap because there's a gap, take the sell back down to here. That's a gap trade. Uh, cool. And that's pretty much it. And that's how you take the trades. Pretty much I'm just looking for pullbacks into liquidity zones. Remember, liquidity zones are right here. Another liquidity zones right here. But you see how you how I look at market structure patterns and all that. And it's like that for every single pair. This is gold. Uh, this is Nas into the 4. And you see how Nas market structure is kind of choppy, but these dips are happening at like right at the best times. 5, 9, 9, 1, 9, 1. What is this? What is this? Off. This is like war. I think there's like war news or something was going on right here. Uh, what is this? 5, bought up at 5. Cool. Now with Nas, you don't have to trade Nas before pre-market. You could wait till 9 o'clock to happen, but most of the times, a lot of the time, Nas and U30 will make pre-market moves, and the New York Times will be continuations of what the market was previously doing. So let's go to the 4. I'm already on the 4 right here. First thing I'm seeing here is like a trend line. I'm seeing hella trend lines. First one's gonna be here. They don't gotta be perfect. What's this, Tuesday, third? Yep, I'll just have something like this. Right here, just give me a sense of direction, like I know the market's bullish. And then where's Monday? It's right here. Monday is right here at 5 a.m. Yeah, Monday's price action was terrible on this Nas. So Nas literally only moved literally from like here. This is the next day. Yeah, this is hold up. Yeah, this is the when is this? Yeah, this is the next day. So Nas ain't do anything on Monday. So this is really just like on you gotta it's 5. What are you gonna wait on? You know it's selling. What do you think it's gonna sell to? Is it overall selling move? You couldn't say no because there's an uptrend already. So that's already kind of out. So this probably did fake a lot of people. This was probably a hard trade for people, but you can see if you got it on the sell right here, it did this. Let me zoom in for you. You see how price manipulates people too. So there's probably a lot of people that got in on the buys here too and thought it was going to continue to buy. And so they had the buy sells in and they probably got a little bit of pippage right here. And this only went up like 100 pips. So this ain't really a lot. So this would have been like people were holding this trade, but it's low volatility. So what does it do? It takes everybody's stop loss who thinks it's going to buy up and it continues to sell back down. And then how long does it sell back down? It broke this liquidity right here because all liquidity is where price touches and where does price react at a lot. And you'd go here on the four. It's easiest to see it on the 4 hour. A price came and touched right here, here, and then you just wait. So, like I said, you support and resistance. You don't take you don't take buys at support, and you don't take sales at resistance, if that makes sense. So you could take buys right here, but for this to take buys here, it'd have to for you to get into buys and feel comfortable taking it, it would have to buy up fully, then come back down, then go up. Because if not, if it just buys up and then it just comes back down, it's probably going to come back down for the most sense. And you see how this one came back, retesting in these liquidity zones, and then you could check some buy up. And this buy up happened on Tuesday afternoon. Well, you could have gotten in buys at 9. Yeah, the buy up happened at 9. This candle right here, that's 11. Yep. This is 11. I'm in Texas, so that would probably be like 10 a.m. here. That's 10 a.m. So this would be here, and you just catch that all the way from here to here. Yep, and then this would be Tuesday's trade. It came all the way up here. This is at 5. So this 5 hour candle was a doji that came down on the top. You can see there's a liquidity zone right here where it previously bought up from. And you always just gotta look left to go right. Always remember look left to go right. And then you know it's in this zone. Where is it at? I'm probably gonna take the sell. It already sold down. You could take the sells all the way back down to here. That's a cool little sell trade, and vice versa. And then when you want to get in, look on 15. It's the same thing. Like, because you can't really tell when the markets move. You have to be alert and ready to take the trades when the opportunity presents itself. So people, you don't have to be on the charts all the time. But when you first get into trading, you have to have put in that card time. So like me right now, I can glance at the charts. I already know what it's doing. I can probably already tell what the market's going to do before it happens just because I have the chart time. But until you get that edge in the market, like you have that chart time, you're going to have to like sit on the charts. You're going to have to look at it, think what it's going to do, come back, look at it again, see if you're right about that and keep it moving and do that over and over and over until you get those reps in. That way, that way you can just get to a point where you can glance at it, you know what it's doing, you look at the entire time frames, and realistically, trading is really easy. You just can't overcomplicate it for yourself at all. But yeah, that's pretty much how I take the trades. I will go really more in depth with like trade management as well as doing all that stuff. I try to mention some of that stuff as well, going into like break even and all that stuff. But that stuff is a little bit hard to do unless you're only live trading. Like I said, it's the weekends. I can talk theory of how to actually execute on the trades, but talking about it and doing it are two different things. So I'd rather save that for like the live sessions and all of that. But if you have any questions, let me know. Put it down. If I miss any, if you want to see more, or if I did a terrible job, just tell me that in the comments. Just put it down. If you liked the video, put it down in the comments and we'll be back. This is going to be a breakdown. And just a quick overview of my trades. I'm a intraday slash swing trader, but I don't really swing. I kind of scalp a little bit. I kind of do a little bit of everything. But yeah, my main tr pairs that I trade are going to be Nas and gold right now. That may change, but we'll see. But they've been paying the bills. But we out and let's get it. Let's run it. Let's run this shit up. Till next time. Peace.